Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, and it's March 16th, the day after the Fed meeting here. We'll touch on that in a moment here, but we do got some economic data to go over today, and we'll start off with the weekly jobless claims. So last week we had 243,000 people apply for unemployment. Forecast is supposed to be the same range at 243, and it came in pretty much in line at 241,000. Again, these numbers are actually still really good. These are numbers we haven't really been seeing since the early 70s, 1970s. So, showing that jobs creation is obviously a very good thing going on right now, and that jobs are definitely improving, which we all like to see here. Next in line, we got the housing starts here for the month of February. So in January, we had a 1.251 million housing starts. Forecast supposed to go up to 1.27. And it went up to 1.288, so a little bit better than expectation, which is a great sign here. However, if we look at the building permits, we had 1.293 in January, and it dipped down to 1.213 million in February. So a lot of the houses got started in February, but the permits dipped a little bit in February. So it's kind of give or take right there, I guess. Philly Fed, this is the manufacturing in the Philadelphia region. Yesterday we saw the New York region, and now we're seeing the Philadelphia region. And the previous reporting back in February was at 43.3, which is a very high number here. Forecast for March was supposed to dip down to 30, and it came pretty much in line at 32.8 right there. So still a good number, but obviously it dropped. It dipped from the higher number here. Last but not least, so we got the job openings for the month of January. So in December we had 5.5 million job openings, and increased in January up to 5.6 million. So this is where obviously we're seeing these new jobs being created, and we're having that U6 number improve as well, more participation in the labor force. So this is, again, the economy is looking more up and up in terms for job creation. And then we'll touch on the FOMC. Basically, they raised it a quarter point yesterday, as we expected. So now the Fed funds rate is 0.875. They basically said rate hikes. They expect two more rate hikes for this year. So investors were very relieved from that point, as there's concern that maybe they may have more of a hawkish tone and maybe raise another 3, maybe for a total of 4 for the year. But basically they insinuate that the inflation's going up, jobs are improving. Inflation reaching a level, but not at a point where it's going to be a concern at that 2% level. So those were all good signs. Basically, she said, simply put, the economy is moving, doing well. So that was her simply put. And then they didn't say anything about the balance sheets of the bond market. So that was a good sign for bonds as well, that they weren't going to be selling off anytime soon. So let's go ahead and take a look here at the headline news, and right now the stock market's down. It's kind of taking its cue more from the oil. Right now, it was they said the dollar was a little weaker earlier, so oil prices were up, and now they're down because again there's more concern about potential oversupply in the market right now. So the energy sector is kind of taking its cue, and oil prices kind of dipped a little bit more today, so bringing the stock market a bit more. The Bank of England today also had their meeting and basically elected to keep their interest rate level at 0.25%, where they've been for a while here. So let's go ahead and take a look here at the bond market. So as you see here, we had a huge rally yesterday. After the announcement, not only the stock market went up, the Dow went up like over 100 points, but the bond market went up 78 points, or 78 basis points. So we cleared just above the which used to be our floor, now is our ceiling of resistance. Now we just closed above that. Today we started off lower at 12 basis points. We're up a little bit. We're touching out that resistance level now. We're about 7 basis points below where we left off yesterday. So some lenders may have worse pricing today. As a result, some people may not have priced in the full yesterday, so you may see a little mix today. I would have to kind of say mix because some people, depending on the day, may not have put in the full pricing yesterday, so therefore they're going to give the better pricing today. As you saw, there was a pretty big jump for 78 basis points. So I would say it's kind of a mixed pricing today, depending on where you're at. Especially if you're on the West Coast, most likely you're going to see about the same price where we left off yesterday. All right, folks. So, anyways, if you guys like to get more updates, excuse me, I'm sorry about that. If you guys want to get more updates throughout the day, just come over to Twitter. You can get more updates on Twitter, and where I post throughout the day. Hope you guys have a wonderful day. We'll see you guys tomorrow. Bye-bye.